everyone, it's Mike here, and we've got another economic report to go over today. We'll start off with the core price index, or I'm sorry, the producer price index. This is inflation on the wholesale side of thing. It's kind of like the Rodney Dangerfield of these inflation reports because it doesn't get as much respect, but it does kind of give us an idea as to maybe forecast of if inflation will rise or not on the consumer side because that's kind of where we mostly look at, give more weight in our data, and that's the CPI report and the PCE, especially the CPE or PCE because that is the Fed's favorite gauge for inflation. So we'll start off with the again the consumer side of things. So the core PPI for the month of December, so in November was at 1.4%. Forecast is coming for 1.3, and it actually dropped down to 1.2. Now, the difference between core PPI and the regular PPI is that you exclude food and energy, which are variables that you cannot control. So it gives us our basis, and that's kind of really what has the most weight when we review these. Now, a month over month on the headline number, producer price index, in November it was a 1.1% increase. Forecast is coming for 0.4% in the month of December, and it only rose 0.3%, so it had a bit of an increase there. Now, we also got retail sales that came in here. Now, this one we have two reports. One we take out big ticket items like autos, which can kind of skew the numbers one way and the other. So we'll start off with the main one we look at, which dropped in November at 1.1%. Forecast is calling for unchanged, and it actually dropped 0.7%. Now, when you take out the big ticket items like autos, it dropped quite a bit more. We had 0.9% in November. Forecast calling for a 0.1% drop, and actually dropped 1.4% in the month of December. So, again, economy not looking so good right now. Now, back to PPI again. We got the core PPI month over month. And as you can see, it was pretty much more moderate, which is why it dropped year over year. It went from 0.1% increase in November. Forecast calling for an uptick to 0.2%. However, it remained pretty much the same pace at 0.1%. Now, we got manufacturing data out of New York, which is and this one says New York Fed Manufacturing, but it's the Empire State Index here for the month of January. So we had a 4.9 in the forecast for the month of November. I'm sorry, in December. Forecast calling for a 6, and it only went up. It's only at 3.5%. 3.5, so there's no percentage, excuse me. So anything above 0 is considered expansion, so it's very low here. It's barely trading above, but still moving, and it's been kind of declining here of late. Now, we also got capacity utilization for the month of December, so at a 73.3 in the month of November. Forecast calling for an uptick to 73.6, and it did increase to 74.5. So that's not a much better number there. Same thing for industrial production. We had 0.4% increase back in November. Forecast calling for half a percent, and it came up much higher at 1.6%. So much better idea in the month of December for that one as well. Now, however, we got consumer sentiment. This is a study that brought out to you by the Michigan State, or I'm sorry, University of Michigan, and we had 80.7 in the month of December. Forecast is supposed to be ticked down a little bit lower to 80, and it dropped all the way down to 79.2. Now, we also got business inventories in the month for the month of November. So in October, it rose 0.7%. Forecast calling for 0.5%, and it came in expectation. So overall, not great. Inflation's still pretty tame from what we can see. However, retail sales is one thing we're really looking at. Manufacturing is slowing down a bit, and consumers are not feeling as rosy as before. So those items that are things we do kind of have to keep our eyes on, because obviously we need retail sales up there because that's what helps keeps the economy moving along. And if people aren't feeling as good about where things are at, they're not going to be out and purchasing and buying things to keep the economy going. So this will slow things down. These are things to keep an eye on. So let's jump ahead here to the headline news. Stocks are down as a bit. They didn't like the data that we saw. They're not really giving as much reaction to the stimulus package, but it was announced last night approximately $1.9 trillion in the stimulus package. Again, not much reaction to it so far, but they are getting a little concerned about the pace of the rollout of vaccines. There was an announcement from Pfizer that they're not gonna have enough vaccines for Europe, and we may have a kind of a slow rollout. So this is a bit of a concern because obviously a slow rollout and might slow down the pace of trying to get economy back to where it was prior. So again, so stocks are down a bit today, and they declined a bit yesterday. Let's see how this is playing out in mortgage rates. Mortgage rates are showing some improvement today after upward trend. As you can see here by this wick, we were up, even had a slight improvement by like 2 basis points. It slid downwards, ended up closing down 16 basis points. So a lot of lenders did reprice with a little bit worse pricing as a result. But now we are up again. We're up about 23 basis points. So depending if the lenders repriced for the worst yesterday, we're going to have better pricing, and it should be pretty close to the day before. So the pricing should be pretty close what we saw again on Wednesday, Wednesday's pricing. So, but better than yesterday's close. Now let's take a look here at yields. Yields are coming down a little bit. It's been kind of holding between 0.9 and 0.10%. I'm sorry, 1.09 and 1.1%. And as you can see here through this range here. And right now it's sitting at the bottom here at the floor at just under 1.09% on the yields. So again, rates are a little bit better. We did have a pullback. Price did worsen yesterday. So depending on when you saw the video, I would say it would be comparable to yesterday's morning's video. We would be unchanged, but however, we did have a lot of lenders did reprice for the worse. So from close, we're better than close. All right, hopefully that explains a bit. If you guys have any questions about anything with regard to mortgages or real estate, I'd be more than happy to talk with you or answer any questions I may provide. A little bit of background about myself. I am a loan officer and I do work with a national lender. If you'd like to run by anything in regards to purchases or refinances or answer any questions, or if you want us to take a look, see if we can help you guys out with any scenarios, I'd be happy to take a look at it. So please feel free just to reach out. At this time, just go ahead and reach me through direct message me through the social media app that you may have found me through. In the meantime, I'm working on a contact, like maybe a website you can go to, and you can you can reach me through that. So you guys have a great rest of your day. Enjoy your weekend. And also on Monday, will be Martin Luther King Day. So the markets will be closed. So I won't see you guys until Tuesday. You guys have a great long weekend, and see you guys Tuesday. Bye-bye.